AI requires a lot of compute power, and the cost for your AI workloads can spiral. That is, unless you're running on OCI, Oracle Cloud Infrastructure. This was the cloud built for AI, a blazing fast, enterprise-grade platform for your infrastructure, database apps, and all of your AI workloads.
Right now, Oracle can cut your current cloud bill in half if you move to OCI. Minimum financial commitment and other terms apply. Offer ends March 31st. See if you qualify at oracle.com/WSJTech. Oracle.com/WSJTech.
Good afternoon. Getting right down to business here. We are doing it live, doing more at 4 weekday afternoons, right after Guy Benson at 3. And all this just before the 790 KBC News Blitz with Randy Wang at 5. And be sure to stay tuned tonight at 6 for the brand new Just Help One radio show and podcast presented by the Union Rescue Mission. I'll be on again at 6 o'clock this evening and every Thursday night with Mark Hood, the CEO of the Union Rescue Mission, the #1 organization helping the homeless in Los Angeles. Go to justhelpone.org and stay tuned tonight at 6 for the Just Help One radio show on 790 KABC. Right now, it's Mottek On Money, live on the air on 790 KABC, streaming live online worldwide at KBC.com, and your on-demand Mottek On Money podcast, KBC.com, Apple, iTunes, YouTube, all of your favorite podcast platforms. Stocks taking a tumble today. The Dow down 451 points. Looks like Walmart leading the way lower today. Look out for falling prices on Wall Street with Walmart shares down nearly $7 at 97 and change as the big box retailers said profit growth will slow this year, even as sales continue to climb, adding to concerns about the health of the consumer these days with consumer credit at or near all-time highs. We did see the Dow post its biggest one-day loss since January 10th, down 451 points at the close. It had been down nearly 700 points early on in reaction to that Walmart news. And Walmart, of course, a big part of the Dow Jones Industrial Average. Walmart said holiday quarterly revenue rose about 4%. E-commerce sales shot up 20% in the U.S. as growth in-store pickup and home deliveries and gains with upper-income shoppers boosted earnings results at Walmart. But the outlook at Walmart disappointing Wall Street. This just in, inflation running hot in the world's fourth largest economy, Japan, which comes in fourth based on economic size behind Germany, China, and #1, the U.S. Japan's inflation rate in January at 4%, hitting the highest seen since January of 2023. And core inflation there, which takes out food and energy, rose to 3.2%. The so-called core inflation rate in Japan strips out prices of both fresh food and energy and is closely monitored by the Bank of Japan, which is basically the Federal Reserve of Japan. EV stocks in the spotlight. Rivian Automotive today made good on its promise to get to its first quarterly profit and blew past Wall Street analysts' expectations for sales. But Rivian, the maker of EVs, saw initial stock gains evaporate. Rivian shares down about 2%, turning lower in the extended session this afternoon. The other big news this week in the EV world, Nikola, the truck EV company, announced its file for Chapter 11 bankruptcy protection this week and would pursue a sale of its assets. That's the latest EV maker to stumble after grappling with weak demand, rapid cash burn, and funding challenges, according to the Reuters news service. This latest news ending a challenging journey, which included several leadership changes at Nikola, plummeting share values, and short seller allegations. Nikola stock was around 34 and change in the last year. Now it's at 44 cents. More turmoil in the EV market. Also nervous time in the car business overall in the face of President Trump's threatened important import tariffs on imported cars ranging from 25 to 300%. Some European car makers are now considering moving production, lock, stock, and barrel, production of their vehicles to the United States. I'll discuss the latest car news this afternoon with Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. Longtime listeners of this program know we stand tall for small business. And coming up later this hour, I'll be speaking with Jeff Brabant, the vice president of the National Federation of Independent Business, the NFIB, the voice of small business in America. We'll get an update on the small business confidence readings, jobs, tariffs, and some other uncertainty over regulations, including the so-called Corporate Transparency Act, which was signed into law during the Biden administration in 2021. Looks like the implementation of that act, which requires millions of companies to disclose their ownership to the government, is back on after a federal judge in Texas reversed an injunction he issued last month. We'll get the latest on all that live later this hour. But first, on your money, the markets, the economy. Gold, crypto, the whole works now. Joining us live, Jonathan HOENIG, Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, and author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Jonathan HOENIG, good afternoon to you, sir. Oh, hope you're not on mute there, Jonathan.
Oh, Frank, it's great to be with you. And it seems like during the Trump era, we get a week's worth of news and data in just a day's time. So, from economic reports to company earnings to statements on finance and interest rates and tariffs, there's just too much to talk about tonight.
Well, we're going to do our best, and we have the right person on the line to do so. Jonathan HOENIG, it's always great to have you with us here. And so Walmart leading the charge lower today. What happened there?
Well, a miss, but this had been really one of the strongest of the strong stocks. Frank, there was a time when Walmart was thought to be left behind because of Amazon. They upped their game in recent years, and the stock followed suit. I mean, it had been on a tear, and even now with today's decline, it's still up about 8% year to date, 30% in just the last 3 months. So this is a name, Frank, I think that you can buy on the dip. Walmart is the American consumer, and they're uniquely positioned because when the American consumer is tapped out, they still shop at Walmart. They're still a low-cost leader. So a little bit of a give back today for a value stock that's been on a run, but I don't think you bail on Walmart just yet.
All right, and certainly when my daughter goes into Walmart, in any store for that matter, it's always toys first. And we see Hasbro having a big day today. The toy maker Hasbro among the leaders among the S&P 500, up about $8 at $69.06. One of the best days that stock has ever seen.
Yeah, I mean, pretty amazing move, and it kind of reminds us, Frank, that for years now we've talked about those Mag 7, Mag 8, those small select stocks, but the market is full of such fascinating companies, intellectual consumer companies, diagnostics, medicine, automotive. So I think it's a great time this year actually to be an active investor, non-index investor. In fact, so far this year, Frank, international stocks are doubling the performance of domestic stocks. The VEU, that's the ETF that tracks non-U.S. stocks, it's up about 8%. Our S&P is only up 4%. So this is a great year to, whether it's Hasbro or international, look under the hood to find those names that are really moving outside of the indices.
Right. You've done a great job on this program spotlighting some of that with so much attention, of course, on America First and U.S. markets and so forth. Looks like the German DAX index hit a record high recently, which you spotlighted, and some of these other markets are rallying. What are some of the other places that are catching your attention?
And isn't that interesting, Frank? The German DAX at a multi-year high, even as the German economy is officially in a recession. It's one of the reasons why in Price is Primary, we always talk about, focus on price, because if you're focusing on what the economists are saying, the economists are the ones that told us that inflation would be transitory 5 years ago. You got to keep an eye on price. And I'm seeing a lot of international names do well. One that I like, Frank, quite a bit right now actually is China. CNYA. That's an ETF that tracks Chinese stocks. They have been absolutely obliterated. When Chinese economy was being liberated in the 80s and 90s, they were soaring. They were opening their markets. They were getting rid of state-owned enterprises. And then in recent years, especially during COVID, they became much more authoritarian. The market, the economy suffered. So I think you can play the other side of that trade. China is a buy. CNYA is the stock that I own over at capitalistpig.com for clients. Do your own research, but you can be a contrarian and own China here.
That's very interesting. And I mentioned the new readings that just came out on the Japanese economy, inflation running hot there, and indeed many parts of the world. And that certainly has been cited as a big reason why we're seeing gold rally to at or near record highs. Let me bring up gold here, hovering at around 2,956 here at the moment. What about inflation and gold's reaction to it?
That's going to be the surprise, I think, Frank, is. And everyone had assumed, not unlike the 1970s, the mid-1970s, Ford thought they had inflation licked. The 10-year went from, 9% down to 6%. And then just 3 or 4 years later, it was up above 10% on its way to 12, even 13. And, of course, gold the same. I mean, gold has been historically such a fine indicator. And the fact, Frank, that it continues to go up, almost up to $3,000 an ounce, to me is the best harbinger of inflation that we need. Put on top of that, interest rates themselves. You know, we got a hot inflation reading last week, but rates themselves have been going up steadily, even since the Fed started cutting in September. So put me on the side that says you're going to want to own gold. I would even own there's an ETF, Frank, that's DBE. That's David Boy Edward, DBE. It owns a lot of the gas, the oil, the energy commodities. I do think you can own gold and commodities, as higher inflation is going to push those prices even higher than they are today.
Very interesting. Silver, of course, also seen a pretty good ride lately, above $33 an ounce now, $33.42 at last check. And platinum, which in the past was even higher than gold, selling well below gold now, below 1,000 at $997 and change, whereas gold is getting close to 3,000. What about silver and platinum here now?
Well, a rising tide lifts all boats. Those have been the laggards, but I do think that they will get bid. One of the things about metals, Frank, is that they generally don't pay dividends. A lot of people like to have dividends as part of their investment portfolios. So one idea, too, is within the commodities field is an ETF like AMLP. That's A, M as in Mary, L as in Larry, P as in Peter, AMLP. This is a fund that owns all of these energy-related infrastructure businesses like tolls and pipelines and transistors. And so basically they're high dividend paying energy-oriented companies. AMLP yields over 8%. I think it's going to benefit from the commodities boom that we've been talking about. So if you want a little dividend with your stock appreciation, put AMLP on your list to research as well.
Very interesting. And I know you follow what's happening in the crypto space. As our listeners know, we have the biggest fans of crypto here, as well as the harshest critics and those who follow the bouncing ball here. Bitcoin right now back to 98,500 or so. It's seen a wild ride after hitting a record high after President Trump's inauguration. What about the crypto space here now?
I mean, 100,000 really is becoming that minnow line, if you will, that to keep an eye on. And Ether, Frank, had been much weaker earlier in this year. I've been seeing that. I mean, Ether had actually been down year to date for a period of time. So, given the fact that President Trump has hired such a crypto-friendly treasury team, you'd expect to be seeing a lot of the crypto names doing better than they are now. So I'm holding off on putting money to work in crypto. But I wouldn't hold off on putting money to work in some of the banks, Frank. Actually, Banco de Chile, BCH, is an ETF. Is a fund on the New York Stock Exchange. Just a big Chilean bank that I think that is trading at a much lower valuation. So that's a kind of an off the radar screen. The financial name maybe even more off the radar screen than crypto, which I think is in a holding pattern at least for the time being.
Very interesting, and given the pro-business friendly administration in place, the expectation is that merger activity will be picking up. What about on that front, and what are your thoughts about companies involved in merger activity?
Well, that's a great point. I mean, there's places to be made money through buying and selling of companies that are undervalued, and that's always been a great strategy, Frank. You know, companies, especially with good credit, can roll up smaller competitors, create bigger and bigger companies. And one way to benefit from that is an interesting ETF called the Merger ARB Fund. Ticker symbol is pretty easy to remember. It's ARB, A-R-B. And basically, it's a fund that they go out there and they buy the companies that are being acquired, and they sell the companies that are doing the acquiring. So they make the spread, if you will, between when companies get acquired. And what it ends up being is a way to make steady, consistent money that's not correlated with the stock market. So ARB, I think, is a great one. You always want to do your own due diligence, but ARB is a great one that can kind of tick along towards higher returns rather than swing wildly with the stock market, because it's a lot of small bets on individual deals going through. So do your own due diligence, but ARB, I think, is one you can make some money in 2025.
On the live with Jonathan HOENIG, Fox News contributor, portfolio manager at Capitalist Pig Hedge Fund, and author of the book Price is Primary: How to Profit with Any Asset in Any Market at anytime. And Jonathan Hoenig, we're going to have one of the top people from the National Federation for Independent Business coming on this program to talk small business. What about the small cap names? What do you think of that?
They've been left behind. I mean, that's what's so interesting about the market, Frank, is that for the better part of 5 or 6 years now, it has been all big cap and all really big cap tech. So I do think that you can own small caps if you really want to be a diversified investor, and you do. You know, if we're talking about stocks, Frank, you have to be looking 3-5 years out always. So one name that I threw out there, just as an example, is EEMS. That is the Emerging Markets Small Cap ETF, EEMS, trading at lower valuations, higher growth rates, and higher dividend opportunities than their U.S. counterparts. So even if you don't travel in 2025, let your money do some traveling and pick up some of these international, particularly the small cap names.
Very interesting. What is China still considered an emerging market?
That's a good question. I think it's certainly an unstable market. China really unstable, but Frank, the nexus between Washington and Wall Street has never been more pronounced. I mean, with President Trump almost on a daily basis throwing out new tariff numbers, and the word tariff itself now being mentioned in a majority of Fortune 500 and S&P 500 conference calls. A lot of what's happening in Washington is going to be moving what's happening in Wall Street stock prices as well. So particularly when it comes to global trade, it's all about tariffs these days, and when it's all about tariffs, it's going to be all about Trump.
Absolutely, and the dollar too, which of course has seen tremendous strength. Looks like we firmed against the Japanese yen here. We're at 150 versus the Japanese yen. We're at 105 versus the euro, and at 126 now versus the British pound sterling. Usually, a strong dollar is bad news for the multinational companies because it makes our stuff more expensive overseas. What do you see ahead for the dollar here?
I actually think that trend, Frank, is starting to change. Some of those pairs, the British pound, for example, the Japanese yen, just today at 20-day highs against the U.S. dollar. So, look, the long term starts in the short term, but the U.S. dollar has been on a tear for years now. Certainly kind of could use a breather. And the fact that non-U.S. stocks are, as I said, outperforming year to date, that could be the best indicator that, the dollar's strength has finally run out. You've got kind of all the factors in place: higher gold, higher foreign stocks, and ultimately a weaker dollar itself. So we'll certainly keep an eye on that. And for our listeners, even more of a reason to be diversified into international names here in 2025.
Certainly, President Trump pro-defense spending, right? What about any names in the military world, in the defense space, and anything else, any other specific areas where you are putting money now and or taking it off the table?
Well, I mean, interestingly today, Palantir, which is a technology company has a lot of government contracts, that took a hit today because of rumored cuts in Pete Hegseth's military department. My favorite in the space, Frank, is still Boeing. I mean, it's been through so much over recent years. I think the bad news has largely been priced in. But interestingly, despite all the talk of enlarging the defenses and re-energizing American defenses, a lot of the defense stocks have not been leading the way. So I think you could put those as holds, but wouldn't put them as buys just yet.
Jonathan, thank you very much for that very thoughtful and comprehensive assessment. As always great to speak with you. We always appreciate it. So thank you very much for joining us here. Jonathan Hoenig, Fox News contributor. We'll be looking for you on Fox Business as well as Fox News. Also portfolio manager at Capitalist Pig Hedge Fund. Author of the book Price is Primary, How to Profit with Any Asset in Any Market at Any Time. Also big on X, so be sure to follow him there too. Jonathan, thank you very much for taking the call this afternoon.
Always delighted to be on Mottek On Money. Thank you, Frank.
Thank you very, very much. And out to the freeways we go now, 790 KBC. Mottek On Money continues here, 790 KBC. Good afternoon. Pullback for the stock market today with the S&P 500 slipping from its all-time high after a pretty decent record-shattering rally this month. The S&P 500 down 27 points at 6,117, coming off the record high achieved again yesterday. The Dow down 451 today. It was down nearly 700 early on. We're back to 44,177 for the Dow Jones Industrial Average. Walmart leading the way lower today on a disappointing earnings outlook. NASDAQ down 94 points at 19,000. 962. The yield in the 10-year note has slipped to 4.51%. Gold down 10 cents at the moment at $2,956 an ounce. Silver down 7 cents at $33.42 an ounce. And platinum right now hovering at $997.30. Price of oil at the moment up 28 cents, $72.53 a barrel. In the crypto space, we see a Bitcoin up about $40 now at $98,541. Ethereum up 17 at $2,746. And Doge at the moment at 25 cents. Shares of NVIDIA moving higher today, up 88 cents at 140 and change. Apple up nearly $1 at 245 and change. Boeing taking a tumble, down more than $5 at 180 and change. Meta, which saw that epic record run-up, pulling back again today, down nearly $9, back to $694 and change. Hasbro among the winners today, up nearly $8 at $69.06. Hasbro turning in its biggest one-day gain in nearly 5 years today after the toy maker announced it'll meet Wall Street analysts' profit projections, despite the impact of tariffs on its business as it cuts costs and launches new products. And Walmart stock today down nearly $7 at $97.21. And now the latest news on 790 KBC. Mottek On Money continues here on 790 KBC. Good afternoon. Watching what's happening on the small business scene here today. Here's something important. The Financial Crimes Enforcement Network announcing that beneficial ownership information reporting requirements under what's known as the Corporate Transparency Act are back in effect with a new deadline coming up of March 21st. That's next month for most reporting companies. The announcement coming in response to a decision made this week by a federal judge in Texas to essentially lift the preliminary injunction on enforcement of the Corporate Transparency Act that was passed during the Biden administration back in 2021. Now, according to the National Law Review, in addition to the deadline extension of 30 calendar days from February 19th this year, FinCEN notably stated that in keeping with the Treasury's commitment to reducing regulatory burden on businesses during this 30-day period, FinCEN will assess its options to further modify deadlines while prioritizing reporting for those entities that pose the most significant national security risks. They also intend to initiate a process this year to revise reporting to reduce burden for low-risk entities, including many small businesses. Now, FinCEN, that's the Financial Crimes Enforcement Network, did not provide any further details regarding how or when the reporting rule would be revised, but FinCEN did note that it would provide an update before the March 21st deadline of any further modification of the deadline, recognizing that reporting companies may need more time to comply with their reporting obligations once the update is provided. Meanwhile, in Congress, several bills have been proposed that, if signed into law, would push the reporting deadline out still further. Recently, the Protect Small Business from Excessive Paperwork Act of 2025, co-led by Congressman Zachary Nunn of Iowa, as well as others, unanimously passed by the House. And that bill, if passed into law, would modify the deadline for filing of initial reports by reporting companies that existed before January 1st, 2024 to not later than January 1st, 2026. Also, earlier this month, the Protect Small Business Excessive Paperwork Act companion legislation in the U.S. Senate that would likewise extend the filing deadline until January 1st of 2026 was introduced by members of the Senate, Republican members of the Senate, and referred to the Committee on Banking, Housing, and Urban Affairs. Also, this year, another bill, earlier this, in fact, it was in January, the Repealing Big Brother Overreach Act was introduced by Senator Tommy Tuberville of Alabama, Republican there in the U.S. Senate, and reintroduced by a Republican in the House, Ohio Republican Warren Davidson. That bill, if passed into law, would repeal this entirely. That Corporate Transparency Act remains to be seen. I know the National Federation of Independent Business is following all of this closely. We hope to be speaking to one of the top people about this. As noted in the previous post, that particular act landscape remains volatile. A task force will continue to monitor the various court cases, both in Texas as other jurisdictions around the country, as well as the legislative bills that are making their way through the House and Senate, and will continue to provide updates as they become available. According to the National Law Review, in the meantime, reporting companies are advised to comply with the law as it currently stands, and barring any further updates from FinCEN, should begin filing reports again if they've not already done so. So that's a very big story that we're following very, very closely. Of course, closer to home, California's Governor's Office of Emergency Services, FEMA, and the County of Los Angeles, along with other state and local partners, continue to help in the recovery effort here following the firestorms last month. They've opened disaster recovery centers throughout Los Angeles County after those unprecedented firestorms left thousands of homes and businesses destroyed. The Cal OES now leading the efforts to respond to and recover from the wildfire impacts involving nearly every part of the state government. Work now turning to recovery, where the OES, state agency staff, federal and local partners work to help fire survivors get back on the road to recovery following the wildfires that began on January 7th. Of course, we'll have the very latest information about all that. UCLA Disaster Recovery Center, their location on West Pico Boulevard at the UCLA Research Park West. That's a 10850 West Pico Boulevard. I believe that's where the West Side Pavilion used to be, that big complex there. There's now a UCLA Disaster Recovery Center. There's also an Altadena Disaster Recovery Center location at 540 West Woodbury Road in Altadena. Also in Pasadena, Disaster Recovery Center location. Looks like that one did close, but looks like you have other locations throughout the area here. We're told the state is committed to supporting residents impacted by what's happened. Resources for financial assistance, housing funds for repair, and more are available to help individuals and families. And you can get more information at ca.gov/LA Fires for the very latest up-to-date information on disaster recovery programs, important deadlines, and how to apply for assistance. Looks like individuals, families, and business owners covered in the presidential major disaster declaration when President Trump was here. Anyone who sustained losses can apply for disaster help from the federal government disasterassistance.gov. And also you can go to the FEMA smartphone app. The disaster recovery centers I mentioned are also a one-stop way to provide get you resources. At the disaster recovery centers, residents and business owners can apply for federal help and access other available resources from local, state, and nonprofit agencies. They can include learning about disaster assistance programs, finding housing and rental assistance information, meet with state agency reps, and get help from nonprofit organizations here in Southern California. Tomorrow, by the way, at 4:05, I'm scheduled to speak to Rick Caruso, who's leading one of the major recovery efforts here in Southern California. So be sure to tune in tomorrow afternoon right here at 4:05 for the start of Mottek On Money. Rick Caruso, Los Angeles business, civic leader, and leading philanthropist here in Los Angeles, scheduled to join me live tomorrow afternoon at 4:05 right here on Mottek On Money on 790 KABC. Keeping an eye on the market action today, in case you hadn't heard, we saw a pullback. It was getting pretty ugly there for a while, with the Dow down nearly 700 points early on in the session in reaction to Walmart's earnings report and disappointing earnings outlook, adding to concern about the health of the American consumer. Walmart stock took a tumble today, down nearly $7 at 97.21. It's part of the Dow Jones Industrial Average, and the Dow did come in for a closing loss today of 451 points, settling at 44,177. The S&P 500, which started the day at a record high, ended the day lower by 27 points at 6,117, and the NASDAQ closed down 94 points at 19,962. The yield of the 10-year note has eased to 4.51%. Looks like the work of DOGE, the Department of Government Efficiency, having an impact on those fixed rates, those long-term rates, and they've been coming down, which is what President Trump has stated he wants to see happen. This at a time when the short-term rates are being held steady for the time being by the Federal Reserve and expected to be held steady until at least the end of this year. At least that's the expectation among Fed watchers here at the moment. Cryptos, of course, have been all over the place. Today we see a Bitcoin having a rally back above 98,541 here at last check. Ethereum at 2,746, and Doge, that is the meme coin, at 25 cents. And the price of gold continues to hover at or near record highs, right now at $2,956 an ounce. Silver at $33.42 an ounce, and platinum, which we also keep an eye on these days, at $997.30. And now the latest on your ride this afternoon here on 790 KBC. Frank Mottek here. Did you know that for more than 10,000 years, gold has been the greatest store of value and considered a safe haven asset to preserve your wealth? Well, now with the U.S. debt at more than $36 trillion and climbing, concerns about the economy and the development of the digital dollar, central bank digital currency, it's more critical now than ever before to safeguard your assets like your cash savings and retirement accounts with physical gold. Opening a gold IRA is one of the best ways to secure your wealth and create a stable financial future. Stop worrying about your retirement in the markets and cash savings in the bank. Feel confident, prepared, and in control with physical gold and silver. Give Joe Morgan a call now at 1-800-753-8534. Mention Frank Mottek, and you could get $1,000 worth of silver with a qualifying purchase. Call now 1-800-753-8534 or visit UnitedGoldGroup.com. Mottek On Money continues here in 790 KBC. Good afternoon. More turmoil in the EV market. We did get a Chapter 11 filing this week. Nikola, that's the EV truck maker, announcing its filed for bankruptcy and would pursue a sale of its assets. That's the latest EV maker to stumble after dealing with the weak demand, rapid cash burn, and funding challenges. Meanwhile, Rivian has made good on a promise to get its first quarterly gross profit and blew past Wall Street analysts' expectations for sales, but the EV maker saw initial stock gains evaporate. Rivian stock slipping about 2% today. Nervous time overall in the car business in the face of the president's threatened tariffs on imported cars ranging from 25 to 300%. Some European car makers now are considering moving production, lock, stock, and barrel production of their vehicles to the United States. Following all these developments closely, our go-to car expert, Lauren Fix, editor-in-chief of Car Coach and the co-host of the Total Car Score podcast. Lauren Fix, good afternoon to you.
Well, good afternoon. Yes, lots going on in our world. We have heard that Volkswagen Group, which is Audi, Porsche, it's actually Bentley, and of course Volkswagen, and other brands. That's the big corporation that's in Germany. However, they're talking about building Audis and Porsches here in the U.S. They're already building Volkswagens in Chattanooga, Tennessee. So you're not going to see the 911. You're not going to see the performance cars. You'll probably see the Porsche Macan and the Cayenne being built in the Chattanooga plant. They have plenty of space. And most likely it's the popular Audis like the Q3 and the Q5 based on the chassis that are available. So we're seeing that. We're also seeing other brands starting to look at what their options are. Even Nissan saying, yeah, maybe we'll not build in Mexico because they're trying to cut costs and we'll figure out a way to build here more in the U.S. They already are, but every brand has already stepped up. Many were smart enough to see the writing on the wall, like BMW 30 years ago. This had happened before, and they have the largest employer in the state of South Carolina is BMW, and they export from the U.S. to literally everywhere on their SUVs. And Volvo also has a plant here in South Carolina, which a lot of people aren't aware of.
That's very interesting. I was not aware of the Volvo presence, but certainly BMW led the charge there with a huge plant building BMW SUVs here in the United States and exporting them from here all over the world. That is very, very interesting. And what about some of the other names that President Trump, of course, encouraging this sort of thing?
Oh, yeah, he's encouraging it for sure. Stellantis was talking about what they did. They shut down the Belvidere, Illinois plant, which was making trucks and SUVs, and they were going to transfer everything to Mexico. They had just had a big fight with the UAW. If you remember, we've discussed that in the past. And they were going to start building in Mexico to try and save some money. But a little bit of nudging, shall we say, from President Trump. They're now going to reopen the Belvidere plant, hire 1,500 people, and make a smaller pickup truck, much like that of like a Ford Ranger, because they don't have anything that's other than the full-size Ram. And so that is actually really good. Bring some jobs in, also bring some more product. They need to make some big product changes anyhow. Nissan, like I said, was doing that. Ford is bringing more of their production here to the U.S. Brands that you wouldn't think that actually build here in the U.S., Honda. It builds more cars here than they do anywhere else in the world, as well as Toyota. Mercedes-Benz in Alabama, Hyundai also in Alabama, as well as Tennessee, and Kia. So many of the brands do build here, but some of the vehicles they build in other countries, and they'll be faced with a 25% tariff. And that's interesting because we've only been charging, 2%, and they've been charging 25%. So in order to level the playing field, that will come into play April 2nd. You're going to see the leveling of the tariffs. not just for steel and aluminum, but also for car components and cars. And that will make a big difference because either one of two things are going to happen. Either they're going to pay the fee, which I don't think they're going to, or they're going to drop their tariff for us bringing our product into their countries, which is good for us. And they'll start deciding to build here, which is actually really good for jobs.
With this America First push, are we going to see American car makers back on the top of the list of best-selling cars? Remember when the Oldsmobile Cutlass was the number one selling car in America?
That was a long time ago.
I know.
Actually, the number one selling car made in America is Tesla.
That's right.
So he builds in California. He builds in Texas. So Tesla, Ford, and General Motors are the only three U.S. automakers left. Stellantis' base is now in Belgium. They're struggling with a lot of different things. They've got some new leaders coming in. They brought the performance guy back for trucks. They have a new gentleman who's in charge of the Dodge lineup. I have a report coming out on that very soon. And they're talking about building possibly a sub-$30,000 sports car because they need to get people walking in the showroom to see it. And then, of course, they have to have other product available. So that's their plan as of this point. But they've got other brands they need to deal with, such as Maserati, Alfa Romeo, and Fiat. Either they're going to have to figure out how to sell here in the U.S. or they might actually pull them out of the U.S. again, like they did in the past.
One of the casualties last year was Fisker. They, too, had those mall-based showrooms. How's that working out, you think, for automakers? A number of Lucid, for example, does this, too, now. Tesla, of course, has been doing it for a while, these mall-based showrooms.
They're not actually doing that well. Fisker is out of business. Anyone that has an Ocean, which was a kind of a cool car, the problem is getting service. Some people are having problems with their center screens shutting down. And so if you have that problem, don't buy one. I would say if they have it, figure out what to do with what you have. But I certainly wouldn't find one that's used and consider purchasing it. As far as Rivian, you discussed that earlier in the segment. But you'll see Lucid's doing okay. They're struggling. They're all struggling. And now that $7,500 tax credit's going away. I have a huge report coming out on Friday. It's really, really interesting because I think what people don't realize is that Lee Zeldin, when he came into office, first thing he did was to remove that California mandate that required the electric vehicles. And they're going to do something that's really interesting. Most people don't know about it. It's called a Congressional Review Act. And that would rush it to the floor, and everybody has to post their vote with their name. And if it passes, they will not be allowed to put this law back into place without a congressional ruling. So this would be very, very difficult to do. So it's called the CRA. We're looking for the simple majority in both chambers. The president will sign it, and passing that CRA resolution is the quickest way to reverse the California Resources Board's regulations, and they're gone. That's good.
And what about Nikola? That's the big. Did you ever get behind the wheel of a Nikola truck?
I have actually. A friend of mine works there, and it was kind of a neat idea. Unfortunately, the CEO got caught up in a lie at one point by pushing the vehicle down a hill, saying that it got better service than it did. But the truth was, it was a neat opportunity of having electric and hydrogen working together, and would have been a good answer. I think when you lie to consumers and you lie to the press, it does come back to haunt you. And in this case, it has haunted them, and they filed Chapter 11.
Lauren, thank you very much for joining us live. That is Lauren Fix, our go-to car expert here live on 790 KBC. Stay tuned now for 790 KBC News Blitz and our new show at 6 p.m. this evening. The Union Rescue Mission Just Help One radio show at 6 p.m. on 790 KBC.
Wealth building expert Candy Valentino paves the path to success.
I was a founder before I could legally order a drink. Now my goal is to help you. And I interview guest experts.
David Anderson, I love what you said. I always say that you never learn in an echo chamber.
It's how we connect those dots to help us achieve the things we want to.
Tony Robbins, thank you so much for being here.
Of course, everybody loses money investing. Make sure you win in the long term.
How did you get rich?
I had to sum it up. Just a lot of hard work.
The Candy Valentino Show. Follow and listen on your favorite platform.